Hello everyone and welcome to my morning report analysis videos on Wednesday 20th of March with me, Richard Perry at Hantec Markets. It is FOMC day and there is an expectation, or certainly in recent days, look at the how the dollar has moved. It's in the last sort of week and a half, it really has slipped back, and there's been a feeling that perhaps the market's gone a little bit too far in the expectation that perhaps the Fed is going to turn fairly dovish today. It doesn't really feel that way. In the opinion that I think that if you look at futures, interest rate futures, they are forecasting for a 25% probability of a rate cut this year. It just seems a little bit too far for my money. And I think we could see that the market's going to have to dial back on that in the wake of today's Fed meeting. And certainly the dollar rebounding a little bit early this morning seems to have a bit of an air of that. In terms of the rebound, you've got sterling, which is lower. Theresa May, the British Prime Minister, is writing to Donald Tusk of the European Union and to ask for an extension to Article 50. A 3-month extension is the expectation that Theresa May is asking for. What the EU then decide to do will be key in the coming days. And certainly sterling has reacted a little bit lower than that from there. But as I said, in front of the Fed, we've got dollar slightly regaining a bit of ground. Bit higher on the on dollar yen, lower on euro dollar, and performing much better against the commodity currencies today. So that's what we've got, and also we've got gold, which has been dragged back once more from that long-term pivot of 1310. In terms of equity markets, little bit of a downward move because we saw the S&P 500 just slipping into the close yesterday, basically flat on the day. You've got futures which are a shade higher, but I think the slight disappointment of yesterday's close on the S&P 500 has hit the DAX especially today, and it's sort of few question marks surrounding the trade negotiations between US and China once more, but I think that it's all still up in the air in terms of that. So markets really are, I think, focused on how the Fed moves today, whether it puts fewer dots going forward for rate hikes this year. That would be interesting, and also cuts of economic projections on growth and unemployment maybe, but certainly growth being the main focus there. But also how the balance sheet reduction program is dealt with by the Fed. That will be key. So let's have a look at what we've got today. We've actually got the UK inflation data, and if I get that, yeah, it's literally just come out. Lower on core and headline a tick higher, so a bit mixed. Really a bit mixed on that inflation data, lower on core, headline ticking higher. Not, I mean, depends on, well, I suppose the core falling is not great, so maybe a slight sterling weakness, but a bit choppy there, really. Now, in terms of my chart of the day, we are looking out for dollar Swiss. Now, I said that the dollar has weakened in recent week and a half, and you can see that on dollar Swissy back towards that 23.6% fib level. Zoom out, you can see the importance of that fib in recent weeks actually. Since that move to the 101.28 high back in November has been seen, these Fibonacci levels have consistently proved to be turning points, and back to close pretty much bang on that 23.6% fib level and bouncing today. So could this be another point at which the dollar turns around again? Got that Fed meeting today, that'll be interesting. That fib level 23.6%. I've said in the morning report I think you should go with the direction of the Fed. So if the Fed turns a little bit hawkish, I think on dollar Swissy you're going to see dollar Swissy rallying probably back towards that high again. Maybe if the Fed doesn't really do a great deal and sort of meets, comes back and a lot more dots go lower, economic projections for growth are cut, balance sheet reduction program halted sooner than market had been anticipating, that would all be dovish, and that would strike a dollar negative tone, and you'd likely see 99.03 in due course, the 38.2% fib level on this chart. So really interesting pivot around that 23.6% fib, and I think the Fed is going to be key to that. We've seen initial resistance that comes in around 102.20, another little bit of a near-term pivot, and then 102, sorry, I say 102, 10020 and 10050 being the next resistance on the upside. Move below 99.80, that would start to generate, certainly on a closing basis, start to generate some downside momentum. So a really key move around that Fibonacci level there. So I wish you good luck in your trading today, and I will speak to you later.